Real estate purchase that is financed. A property purchase with a loan. Let's take a look at how to book that. So we're going to use a journal entry. Okay, and we're going to stick to this HUD or the settlement statement for the most part. And so let's start here with land. Okay, and let's go ahead and book. Yes, and let's say that we're going to allocate the 450,000, 100,000 to land. Second building. Again, this will be a fixed asset. And let's say that the remaining 350,000 is for the building. So now we have our purchase price booked. Settlement charges. Let's start in on those. And there's some of them that we're probably going to want to see broken out. So one of those would be loan fees. Let's go ahead and separate those out. And let's see. First we'll book the origination, 10,800. Okay. And let's look the appraisal. Let's book this. And for now, let's just make it a sub account of actually, let's go ahead and create another parent account. So let's call this rental property. Okay, so let's make this closing costs. And make this a sub account of rental property. Let's make this make land a sub account too. Let's say we're buying a rental. Okay, what was the other one? Building. Okay, so this is going to be. It didn't update. Oh, yep. Okay, and closing costs. And let's do the appraisal fee. Appraisal fee here, $1,000. That'll be capitalized. Yeah, okay. It's just not showing us that it's a sub account. No problem. Okay, and then interest. Let's go and put this in. This is interest paid. Okay. And it's doing that thing where it's not filling in everything. Let's see, what is our interest paid? Daily interest, 355.07. Okay, and then we have our PMI, private mortgage insurance. Okay. And that is $200. And then we have tax and insurance escrow. This would be asset. And we have here initial deposit for your escrow account. We'll just lump it together. Okay, and then let's book the remaining costs here, which would be another $7,000. We add up everything else here. This is our total. So this minus these fees. Let's go ahead and put in here. Origination, appraisal, daily interest, private mortgage insurance. That's self-explanatory. Remaining settlement. Okay. And now we have some credits. So we have our purchase deposits. We'll call this yeah, purchase deposits is fine. This would be clearing out the asset. What do we have there? Okay, $4,500. This is earnest money deposits. And then we have our loan. We'll just make this loan. That's fine. We'll use that for now. And our principal amount is $360. And then we have some taxes unpaid. So make this property taxes. Mhm. 500. Okay, and then we have security deposits that are transferred. So this is a liability. It's fine. Okay, and that is 2,500. We have some rental income. $500 in prorated rent. All right, and then last we have what's going to come out of our checking. 103, 655.07. So I'm off somewhere, aren't I? Let's see. This should be 103, 655.07. Okay, so I'm a little off. Let's see where I'm off here. Okay, 150. Origination, return, 2,500, 7,000. Oh, we missed something here. Missed these city taxes. So let's see. It's going to be miss that 450. Let's move that up there. And then, oh, we missed another taxes. What else did I miss? Oh, these taxes. Okay. Taxes, 1350, perfect. We'll say this is county. And let's move that up. Maybe. All right. Now we balance. There we go. There's our journal entry. Let's go ahead and save this. And of course, what we would want to do is have a class for this property. So I'll turn classes on. Okay, this is saved. Let's refresh. Add our classes. Yep. Not showing me anything. But as far as the other lines, is it? Let's, oh, okay. Let's see if we can get back into that journal entry. Okay, so here we can put our class in. So everything associated with this property is going to have this class. We do this as a customer too. Either way will allow us to look at our financials. With a second dimension. There we go. Checking we don't want a class. So let's save that. And now let's look at our balance sheet. And that today, yeah, I think we just had today's today's date on everything. Okay, so here's our earnest money deposit. Of course, it's negative because we hadn't already booked the deposit, which would clear it out to zero. We have our taxes, insurance. We have our building, closing costs, land, security deposits that are transferred. Let's run this. Still not used to this view yet. I want to look at this by class. There we go. We should see the right transactions booked by class, or in that Main Street 123 Main Street class. Let's look at the P&L as well. Okay, we have that rent. What else? Property taxes, the PMI. I think that was all that hit it. Let's look at by class. Okay, we should see. Of course, this is an easy way to see what hit the P&L too. So there's our rent, interest on the loan fees, PMI, taxes, all that belong to Main Street. And of course, as you see, as you add properties, that's really going to help our financials. And then we could say we only want Main Street, right? If we have a bunch of them, then we can just look at one property at a time. So there we go. That's booking the closing from the HUD or the settlement statement using a journal entry.